In this video, we'll be analyzing Costco stock, ticker symbol COST, and trying to determine if it might be a good stock to buy right now. Costco is one of the largest companies in the US, currently ranked 31st, with a market cap of $208 billion and annual revenues of $227 billion. They operate about 850 membership warehouses worldwide, with about 700 of them being located in North America and the rest mainly scattered throughout Europe and Asia. Costco has about 67 million members that each pay a $60 annual fee to shop in their stores, and they sell a wide array of products ranging from groceries to tires to office equipment. They also have gas stations, food courts, pharmacies, and tire installation services at many of their locations. The vast majority of their revenue comes from product and service sales, which accounted for $222.7 billion or 98% of revenues in 2022, and the remaining $4.2 billion or 2% of revenues came from those membership fees. Costco is definitely a large company, but we want to look at how they have been performing recently, so we're going to take a look at their 2022 results to find that out. Costco's fiscal year goes from the beginning of September to the end of August, so their 2022 fiscal year wrapped up on August 28th, and their annual report for 2022 came out in December, which is pretty awesome for us because we can look at some pretty recent numbers for the business. When we exclude the impacts from changing gasoline prices and foreign exchange rates, 2022 sales increased 10.6% for the whole company, and notably sales in Canada actually increased 12.1%, and in the US and internationally, sales increased 10.4% and 10.2% respectively, and e-commerce sales also increased 10.4% in 2022. Net income for the fiscal year was $5.84 billion, which was an increase of 15.1% year over year. Although these increases do look great in 2022, it's important to look at longer term trends for a business, and this right here is Costco's revenue over the last 12 years, which has grown at 9.3% annually on average. And this chart is Costco's net income over those last 12 years as well. And this net income has grown at an even higher rate of 13.8% on average. Also, return on equity for the year was a fantastic 29%, which is just a tad lower from 2021, but we can see here that return on equity over the last 10 or 15 years has generally been increasing, which is really awesome to see. As we talked about, Costco is a retailer that focuses on low prices, so their margins are definitely going to be low. In 2022, Costco's net margins were 2.57%. The exciting part for me about this is their trend of net margins. As we can see here, margins have been steadily increasing over time and has grown a full percentage point since 2010. So not only was 2022 a great year for Costco, they are continuing a long trend of growing revenues, profits, and profit margins. Recent results look very strong, but we want to know if the company is financially healthy, and we can look at the balance sheet to find that out. Costco currently has cash and cash equivalents of about $10.2 billion, which is down $1 billion from last year, but inventories have gone up by about $3 billion to $17.9 billion. I do want to make a note on inventories here. If we think about this $17.9 billion in the context of the over $200 billion of annual sales, these inventories account for only about 8% of annual sales, which means that the inventories will only be around for 29 days, which is 8% of the year. And after those 29 days, these inventories will be, sold, and then they will be replaced by new inventories. Costco prides themselves actually on their rapid turnover in inventories, and according to the 10K, they say, "We often sell inventory before we are required to pay for it, even while taking advantage of early payment discounts." This is a huge advantage for Costco because it allows them to constantly have significant cash flow, which allows them to operate profitably on these low margins. Coming back to the balance sheet, total current assets increased about $3 billion to $32.7 billion, which is just a skosh higher than current liabilities of $32 billion. So although it is a small margin, Costco still has enough short-term assets to pay off all their short-term liabilities, which is a good thing to see. Calculating their total debt now, Costco only has $73 million of long-term debt that's due within a year and about $6.5 billion of additional long-term debt for a total of $6.6 billion of debt. I like to see total debt to be less than double a company's net income, and over the last 4 years, Costco's net income was at a minimum $3.7 billion, which easily satisfies this requirement. And additionally, Costco's shareholders' equity increased 14.2% in 2022 2022 to $20.6 billion, which is really awesome. So in general, I really like what I see with Costco's balance sheet. They don't have very much inventory, they have low debt and increasing shareholders' equity. Although Costco is popular among many different types of investors, I always like to check out the dividend history of a company if they do pay a dividend. And right now their yield is pretty low at 0.75%, which is completely okay with me because they have a super low payout ratio of 26%, which means they have lots of room to grow the dividend. And they have, in fact, been growing the dividend quite quickly at an average rate of 12.3% over the last 5 years. And their streak of dividend growth is pretty awesome at 18 consecutive years as well. And also to note, this 12% dividend growth looks to be very sustainable since earnings have also been growing at actually 13% per year like we looked at in the past decade. So even though the yield is pretty low, Costco still has lots of room to grow their business, and so far it looks like reinvesting their earnings back into the business as opposed to paying them out as dividends has been a great wealth generation mechanism for Costco and its shareholders. So I'm perfectly happy for them to pay this small dividend for a long time and just reinvest those earnings back into the company in order to grow even more. Up to this point, Costco has looked very strong, but even if we are buying a great business, we need to be sure that we are paying a fair price, and that's where valuation comes into play. So first, we're going to take a look at the PE ratio, which we can see here for Costco over the past 12 years or so, and the current PE is about 36, which is above their average over that time period, which has been about 27. So this makes Costco look to be not too fairly valued, and we can also compare Costco to their peers. Currently, the consumer defensive sector has an average PE of 24, and the retail industry has an average PE of 26. So in this regard as well, Costco seems overvalued. We can also use a discounted cash flow model in an attempt to calculate the fair value of Costco stock. For a variety of reasons, Costco isn't a super optimal candidate for a DCF calculation, but I did one anyway. And with that calculation, I got a fair value for the stock of $303 per share. And when we apply a 10% margin of safety, this gives us a buy price of $273 per share, which is much, much lower than the current price of $480. And that kind of indicates that Costco is overvalued right now. But the DCF model certainly isn't always perfect, and it is, useful as a data point and a tool when we're researching a company, but it won't necessarily always be right. I think Costco is a pretty impressive business. They've been growing both revenue and net income pretty nicely over the past 10 years, and that, quick rate might not hold out over the next 10 or 20 years, but I think they'll still be able to grow the business at a fairly consistent rate because of how much earnings they are reinvesting back into the business. There's overall two main things that I don't like about Costco right now. The first thing is the shares outstanding. Over the last 10 years, shares outstanding have actually increased about 1%. We can see the shares outstanding on this graph right here. And 1% really isn't all that much. But for me, I like to see shares outstanding at least remaining flat. And ideally, they would be decreasing. But since Costco has been issuing at least some shares, this means that current shareholders are getting their ownership stake diluted, which isn't good. The other thing that I don't like at this time is the valuation. To me, I don't think I would really consider touching Costco stock unless it's below $400 a share. It just seems pretty overvalued to me right now. I think somewhere around $350 or below would be a good price that I would, be a bit more interested in Costco, and probably would dig a little bit deeper at that point to see if it's something I wanted to buy. But I don't know if the stock is really going to get there anytime soon. However, I would love to hear your opinions on Costco stock down in the comments below. If you are interested in learning more about another large retailer, feel free to watch this video right up here about Walmart stock next. Thanks for watching, and I'll see you all in the next one.